Welcome to our first live panel discussion directly live from Hong Kong. It's going to be on the theme Asia's infrastructure, Goldilocks moment, too early, too late, or just the right time to invest. We have three panelists all together for this panel, and let me introduce you to our moderator, the Managing Director, Head of Infrastructure Finance Asia Pacific at Natixis, Kwong Wing Lo. Hello, Kwong. We are connected to Hong Kong right now. Hello. Hello.
Hi, thank you.
The floor is yours.
Thank you. Thank you for so.
We have some
on infrastructure, Asia's.
We have some connection problems. Do we have Damian who's connected? Damian? Yes. Fantastic. Do we have Prateek?
Yeah, I'm online.
Great. And Bharath?
Yeah, I'm online.
Fantastic. Kwong, are you back?
I'm here.
Fantastic. The floor is yours.
Thank you. Thank you. So, so we would like to welcome you to this roundtable discussion on infrastructure investments in Asia. So the session is entitled Asia's Infrastructure's Goldilocks Moment, Too Early, Too Late, or Just the Right Time to Invest. And the reference to Goldilocks really is about examining whether now is just the right time to be taking a look at Asia. So to explore this further, we have a panel of notable infrastructure investors, some of whom have recently set up shop or are ramping up teams, while one has had a long-standing presence in the region. In addition, we're going to be exploring key investment themes, as well as trying to understand the opportunities and challenges in Asia. Compared to Europe or the US, Asia can be considered disparate markets, lacking the homogeneity of a single market of Europe or a single currency. And this obviously allows for very different investment strategies, as opposed to operating in a crowded market where everyone is targeting the same or similar assets. Panelists will be able to offer insight into how they segment the market and how they approach various investment themes. And lastly, given all that has occurred this year with COVID-19, we've also canvassed views on how this has impacted investment outlook in the infrastructure space. In summary, we aim to tackle the questions of what has driven the surge of interest in Asia infrastructure investment in the past 12 to 24 months, what are the key investment themes that sponsors are focusing on, what are the key opportunities and challenges in the region, and lastly, how COVID has affected the investment outlook heading into 2021. So this brings me to welcoming our panelists, and I'd like you to join me in extending a very warm welcome to Prateek Maheshwari from OMERS, Rajagopalan from Partners Group, and Damian Stanley from AMP Capital. To give you a brief introduction, Prateek is the head of Asia for infrastructure investments at OMERS and leads their team in Singapore, although he has joined us today from London to understand that he will be relocating to Singapore in due course. He has been with OMERS since 2019, having previously been a senior principal at Global Infrastructure Partners. Bharath is part of the Asia Pacific Private Infrastructure Business Unit of Partners Group and is based in Sydney. He joined Partners in 2015, where he leads the coverage of digital infrastructure opportunities in the Asia Pacific region. And Damian's a partner and head of AMP Capital's infrastructure equity business in Asia, and he's based in Singapore. He joined AMP Capital in 2015, and prior to his move to Asia was based in London and led the transport and logistics sector. With over 20 years experience in industry, Damian has previously held roles at White Sound Capital, Morgan Stanley, and Mira. So to kick off the discussion today, if I may turn to Damian first. Now you've been on the ground in Singapore for just over a year now. So it'd be good if you can maybe explain the motivation for AMP to set up a whole new team from scratch and to invest in Asia at this time.
Yeah, thanks, Kwong, and thanks to the broader Natixis team for inviting me to this event. I mean, firstly, just quickly, for those of you that aren't familiar with AMP Capital, we're a global investment management business with about 140 billion US of total funds under management, of which we have over 20 billion that relates to our infrastructure investment business. Within the infrastructure business itself, we've got a team of about 90 investment professionals globally across both equity and debt strategies. And we've been providing capital to the infrastructure sector for over 30 years, since 1988, in fact, which in totality represents over 170 investments during that period. And in terms of our strategy, particularly for infrastructure equity, we're very much focused on the core plus value add end of the market, essentially providing value investing opportunities for clients in specific sectors where we have proven and long-term expertise. In terms of your question, I suppose the first thing to point out is that Asia is not new for AMP Capital. I mean, we've actually been operating in the region for quite a long time already. So we have offices in Beijing, which we've had since '97, and other offices in Tokyo, Hong Kong, and Delhi since the early 2000s. So it's certainly not a new region for us. You know, from those offices, we've undertaken a broad range of activities, everything from activities related to A&Ps and, you know, broader insurance business, through to public markets, you know, real estate investing, and indeed, you know, fundraising. And actually, as it pertains to unlisted infrastructure, you know, we've also been active historically. So we've made a dozen or more investments, both across India and China. So again, it's not a new region as such to us. And consequently, we do have a very large and significant client base in Asia. Nonetheless, you know, my move to Asia and the consequential opening of an office in Singapore is certainly a significant initiative and a new milestone for the business. You know, essentially, we're looking to invest significant capital over the longer term into the infrastructure market within Asia, both equity and debt, and across our preferred sectors. And I guess with the theme of this panel, I mean, for us, it is the right timing when we look at both the growth and evolution of our own global infrastructure business, but also, frankly, acknowledging the incredible investment opportunity that Asia represents. And by that, I mean, you know, and I think we can all kind of trot out with lots of statistics, but, you know, however you look at it, I mean, Asia is the world's, you know, growth powerhouse and largest regional economy. You know, it's of a scale now that is of global significance. And I'm not just talking about China and India, you know, rather when one considers the broader region and the burgeoning economies within the broader region. You know, these economies are primed for strong growth, especially in emerging Asia, and with a deglobalization away from China and strong demand for you know, intra-regional goods and services. You know, we think the outlook is very strong. And then you overlay and look at the massive infrastructure needs in the region, including with an ever-growing gap between, you know, that need and the public, you know, the sources of funds, much of which historically has been funded out of the public purse. You know, all of that really points to a huge, you know, perpetual need for private sector investment in the infrastructure sector. So kind of in a nutshell, that's why we're here. You know, essentially, for us, it's all about offering our clients consistent, you know, opportunity to participate in what we consider to be a really exciting investment opportunity in Asia infrastructure, one which brings our expertise to bear, and in turn, you know, helps to responsibly develop the region as a whole for the benefit of the people and the users that live and work here.
So with your presence in Singapore, presumably you're going to have a sort of more wider coverage than you had before. I mean, you mentioned you had existing presence, but presumably this is still very much a new push.
Yeah, absolutely. You know, as I said, this is certainly a significant new milestone for the business. So really is a huge amount of focus on us deploying significant capital in the region. As I say, you know, historically we have invested in China and India. Some of that was a while ago, but you know, there's no substitute for having people on the ground, and the business plan and the outlook here is really to really build out the business out of Singapore, which for us is the natural hub for our kind of Asia strategy, and really look across the region for opportunities to deploy significant capital in the infrastructure sector. So absolutely, it's building on, you know, the past and the relationships that we have here in our own infrastructure here, but it's with a lot of motivation and support to build a very substantial business for the longer term.
Great, thank you. Prateek, if I may turn to you. So OMERS also has a presence in Singapore, and I guess with you relocating, I take it as evidence that you also strongly believe in the prospects for infra in Asia at this time. And I take it you guys are also ramping up your focus in the region.
Yeah, hi. Good morning, good evening, everyone. I hope people can hear me. So for people who don't know OMERS, very quickly introduction. OMERS basically stands for Ontario's Municipal Employees Retirement System. We are about 105 billion Canadian dollar retirement system, investing across, as I would say, primarily two areas. One is public markets, private markets. Within private markets, infrastructure is one of the components, along with real estate and private equity. Our infrastructure book stands at roughly 25 billion Canadian dollars as we speak today, so about a quarter of overall OMERS balance sheet. We've operated primarily through New York, Toronto, and London. And then we opened an office in Sydney around 2014, 6 years ago, when we ended up doing 2 deals in Australia, Port of Melbourne, and the recent Transgrid deal. Our entry into Asia was in 2018. Beginning of 2018, we opened an office in Singapore with a desire to grow into the region, and I'll come on to the reason behind that. So the office is not just an infra office. We've got representation from all the business units, but the overall desire is to grow our presence in Asia. And I'll just echo what Damian's mentioned. Asia as a region, if you look at it, it's effectively a region of regions. But if you look at the combined continent, if you call it that way, it's half of world population and almost half of GDP, and a region which is going to grow significantly compared to a lot of other regions, as we see for the next decade or so. But if I then look at it specifically from an infrastructure perspective, the key themes which are in play here, which are the structural growth themes, whether it's a rising middle class, whether it's urbanization, whether it's a growing demand for effectively better transport, data demand, etc. These all play into what we look at from an infrastructure perspective, where a long-term capital like ours, I think, can be deployed in a risk-adjusted, return-efficient way. So to summarize, those are the things which basically led us to open the office in 2018. Our journey over the last 3 years or so has been pretty good, and we see quite a lot of opportunities coming our way in the next 4 or 5 years, and that's the reason I'm relocating to Singapore. We're going to boost up our team as well there, and not just in infrastructure side, but across other investing units, but specifically from infrastructure perspective. That's the idea in terms of our growth plans for Singapore.
So obviously OMERS as a Canadian pension fund, we're also seeing a lot of sort of interest from some of your peer group in Canada, such as Natixis, CPP, PSP. So not that you can necessarily speak for them, but would you expect them to also have a similar outlook in terms of ramping up at the same time as you guys?
Well, not that we all kind of, discuss with each other in terms of which regions we are going to grow into. But I think I would expect the same. If I put it this way, I think a lot of the other Canadian peers of ours have actually been in Asia before us. So CPP and CDPQ have had offices before us, and they've had presence in India, I think, for the last 6-7 years now. So I would expect the same. I cannot speak for them, but from whatever I can see, I think generally most of the large investors are looking at the region. They've started ramping up in the region. They see opportunities. Now, the opportunities can be, the way we look at opportunities can be somewhat different, and the country focuses can be somewhat different between different institutions. But Asia as a region is going to get prominence, in my view, from both, I would say, the direct investors as well as the infrastructure fund investors.
Right, thank you. So Bharath, in contrast, Partners Group has been in Asia for a much longer period in terms of infra, as I understand it. So maybe in some ways we can consider you more of an old guard. But it'd be great to get your perspective on how infra has evolved in the region over the past few years, and also what you make of the current influx in terms of new teams being set up in Asia.
Yeah, sure. First of all, thank you for inviting me, and thanks to Natixis as well. I'll give a quick overview on Partners Group for the broader audience and get into some of your points. Partners Group is a Swiss headquartered global private markets manager. It's established 25 years ago. We have now 20 offices across the world, over 100 billion in AUM, and of which the infra business where I sit is over 12 billion in assets under management. In terms of our check size and mandate, we are a value-added manager, looking at, let's say, mid double digits and, kind of a 2x kind of a return profile on an exit basis. That's how that's where we look to get to. For that, the business of creating value, not buying value, hence not really looking at core assets, core plus strategy. Our check size is somewhere in $200 million at the bottom end of the range, and 400 million to $1 billion kind of safe playing zone. And north of that has historically been not an issue. So reasonably, large pockets to deploy from, and with a value creation, value added oriented mindset. And we sort of get to that point through a large team, global team, 70 plus investment professionals, 60 member value creation and asset management team dedicated to infrastructure, and about 100, senior advisors who sit on the board and deliver some of the value creation plans on various assets. So a lot of that platform sort of really lends into each of our regions as far as infrastructure is concerned. We do have a broad mandate across various sectors, renewables, digital infra, energy infra, transport and infra services, which tends to be one of your crossover PE infra assets. In terms of strategies, we have three strategies as far as infrastructure is concerned. Building core, which is your greenfield approach, platform expansion, which is acquiring an existing platform and growing that across regions, across geographies. And lastly, operational value creation, where it's really about acquiring something and making it better in an explicit way. And lastly, I would say, on the point of crossover assets, one of the special aspects of the platform is it's quite boundaryless, which means, in this universe of infrastructure services, operating companies with the infrastructure characteristic to them, we can truly, and we have looked at this as a combination effort from both our private equity and our infrastructure team, or real estate and infrastructure, as the case may be, co-diligence, co-invest. So really sort of leveraging the power of the platform, which tends to make a difference in various situations as I've seen it. So that's a quick overview of the platform. On your question, we've been in Asia infrastructure for about 10 years, primarily located between Singapore and Sydney, but at a platform level, we have 5 other offices in the region. We've invested about $1.8 billion USD in the region, all value added, core plus strategies, and primarily a lot of that in the last 4 years. And our realized investments have quite outperformed our base case, particularly in the case of Japan Solar platform, where we exited for well north of 3 times money multiple. Being an early mover in that space, a couple of our other investments in Australia in the PPP space have also done really well. And I say that because being here for 10 years has allowed us to be an early mover in some of these markets. And I use Japan Solar, Taiwan Solar, and Australia Renewables as examples for that. So it's really has benefited us in this market. As far as now, I think certainly it continues to be a good time, and it's a right time for our peers to enter the market for sure, as Damian and Prateek alluded to on the case for Asia infrastructure. In terms of partners group, I think the way we look at that, entry of various peers into the region, it's a good thing overall. I think we tend to just focus on our knitting, which is a value-added strategy, not really buying into cycles, buying into value creation. We call it downside protected growth. How can we deliver that in various sectors, and really sort of lending the full force of our value creation team and our asset management team to hands-on create that value. So that's how we see it. It's definitely the right time, and taking a thematic approach to the region from an infra perspective, it has certainly helped us well, and we'll continue to do that. And we can talk about some of those themes later in the discussion.
Yep. Would you consider it's more of a crowded market now for you, or you think actually everyone's outlook is so diverse that actually it wouldn't see that really impacting on your approach?
Certainly, there are more investors into the region now than, let's say, 5 years ago, particularly even in the value-added infrastructure strategy. Having said that, I think Asia is a large market, and with a large amount of white space in certain thematics like digital infra is quite the attractive thematic, where by default there's a lot of white space, which creates the opportunity and there is room for various investors to sit across the region. I think as far as we are concerned, it really comes down to a thematic focus, deep networks, having a value creation oriented mindset, and looking for those opportunities, whether it is building up a platform from scratch where you create your own deal flow, or looking into operating platforms and really leveraging the power of our platform to drive that value creation. So we are just continuing to be focused, and that means saying no to a lot of things that others might say yes to, but really knowing what's our sort of relative value and really zoning in on that.
Thank you. So moving on to exploring key investment themes and opportunities and challenges in the region. Obviously, there are broad brush sectors such as energy transition and renewable energy. There's transport and social infrastructure and digital infrastructure, which are global themes that we would expect to be equally applicable in Asia. But presumably turning these into a regional investment strategy and actionable opportunities requires an approach that's adapted to the local context. And one would expect challenges given the breadth of the region that spans developed markets, such as Japan, South Korea, Taiwan, all the way to more frontier markets such as Myanmar, Bangladesh, and you have everything in between, such as Malaysia, Indonesia, Philippines, which probably need to be, and also other markets such as India and China, which need to be considered in right. Coming to you, Prateek, you recently taking on responsibility for Asia. Hopefully you've had time to kind of formulate some of your own views on the region. What is your take in terms of the key markets you focus on in terms of countries and sectors?
It's a very good question. I think, look, as we probably all agreed, Asia is a region of regions. And the way we're trying to approach it is being more nuanced, where operating out of Singapore with a team of whatever size it is, we need to be focused in terms of how we look at the different sectors you alluded in which countries. And in many of the countries, I think we probably will not get comfortable with still an evolving landscape around regulatory aspects or things around local currency or non-convertibility of the local currency or the ability to take money out. These are different things. As in Asia, we all know there are these challenges. But on your specific question of how and which countries we look at, look, India is a dominant portion of infrastructure activity in Asia as we see things right now. And that is across, if you look at it on the renewable side of things, if you look at it from a transport side of things, or if you look at it from the regulated networks, etc. And I think it's going to remain a dominant theme for the next few years. But alongside India, where we see potential opportunities coming through a couple of countries you mentioned around Indonesia, where you're seeing the privatizations to start on the transport side of things. There could be opportunities on the digital telecommunication infrastructure side of things. Same with Philippines. Malaysia, maybe a little bit behind the other two. Vietnam will see some opportunities on the renewable side of things. And then what you define as the OECD Asia or the developed Asia, Japan and Korea and Taiwan have always presented opportunities, whether it's on the renewables front or it's on the sustainability environmental front. So that's, I would call it as a landscape of regions where we're going to be focused on. I think as things stand today, some of the other countries which you said frontier markets will be a little bit more challenging for us, considering all the things I mentioned, whether it's the currency, regulatory aspects, ability to take money out, just a kind of overall governance frameworks, etc. in some of those jurisdictions.
So you mentioned India in particular for as a particular focus for you. So is there any particular aspect that has made it the case compared to some of the other countries in the region? Apart from it obviously being a very large market, of course.
I think that helps, because the way we try to look at investments is it should not be a one-off investment, which then takes a disproportionate amount of time to try to manage it without actually having boots on the ground. So a steady flow of infrastructure investment opportunities in a region is obviously one of the criteria we look at when we are entering into a new country. But in addition to that, I would call it as the comfort level with the overall regulatory framework, the political landscape, the credit markets in the country, both domestic as well as the ability to tap international credit markets, the overall corporate vibrancy, and the comfort around the, as you call it, as the corporate framework, rules and regulations, etc., have, I think, significantly evolved from, say, 10 years ago. And India is at a stage where, yes, there are challenges, but a lot of things fall in place in terms of what we look at when we look from an infrastructure perspective, and the comfort around the overall investment thesis is quite high in India.
Oh, thank you. That's quite insightful. Damian, if I may come back to you. So you've been in Singapore a year now. Hopefully you've settled in. So I was just wondering, a year on, how has your thinking kind of refined, or how have your views been refined in terms of deploying capital in the region? Oh, I think you're on mute.
Hi, it's a good question, Kwong. I think it's technically been about 14 months. In some ways, it's gone quickly. In other ways, it seems to have taken. It seems to be a long time. Look, I think a couple of things to say there. I mean, I think clearly, back to what I said earlier as well. We had done a lot of preparatory work before I physically relocated here. But we've certainly upped that after I arrived and started to build out the team, which has culminated in a very clear strategy that we're now actively pursuing, which is great, of course. I don't think there have been any material surprises or material changes to what we originally thought. I think there's more validation. I think your kind of word refine is probably most apt. I mean, I think, you think geographically, and I was listening to what Prateek had to say. I mean, we've certainly tightened our focus so that we have a, clear prioritization of countries within the region. Countries where we're being very proactive, others where we're taking a more opportunistic approach. and then the remainder that aren't of interest anytime soon. I think as a headline, I mean, we're biased towards investment grade, countries. I think, if you think about Southeast Asia, which is absolutely of interest to us. I mean, aside from Singapore, I think, we see interesting potential, for us in Indonesia, the Philippines, Malaysia and Thailand. I mean, all very different markets and different characteristics, but, nonetheless, we think they are kind of focal markets in Southeast Asia. In North Asia, again, Prateek mentioned those, Japan, Korea, Taiwan, continue to be, an area of focus, clearly more mature, in some respects, more investable markets. Consequently, there is more capital in those markets chasing opportunities, and the returns often reflect it. But nonetheless, I think it's wise, and that's certainly part of our strategy. And then again, India, that continues to be a focus for us. I mean, we have had people on the ground since 2004. We have relatively been successful over that 15, 16 years. I think our focus in India is I'd say selective. I think we've enjoyed a good deal of success there. We are well connected, and I think knowledgeable about the market. But nonetheless, I think we still find, being very honest, I think we still find India challenging in certain respects, and so we're highly selective in terms of where we spend our time. But I think it's a market that one can't ignore, and we do see opportunity there. So I think that's kind of geographically. I mean, similarly in terms of sectors. I mean, I think the three of us have largely touched on. But again, to be clear, I mean, we as AMP Capital globally have invested a very significant amount of capital in our four sectors, which are energy and power, digital, transport and logistics, and health and social. And as I think, again, we've all touched upon, there are clearly very strong fundamentals and thematics in Asia underlying each of those four sectors. However, again, we've tightened our focus, particularly since being on the ground, we've further tightened our focus. So there are certain segments, I would say, of digital, of transport, of energy, where we're actively pursuing in priority to other broader sectors. And the other thing I'd point out as well is I think the thing that's I've really noted is just frankly the extent of technological innovation in the region, which I think is pretty incredible. That is of keen interest to us globally as we further embrace infratech, which seems to be becoming a widely used term, but I think it's something we've been looking at for quite some time. I mean, not least given our expansive portfolio. We're big users of tech across infra, but for quite a number of years now, we've been actively looking at areas to invest there. And I think you don't have to be on the ground long in Asia just to see that innovation, which is really exciting. So I'd highlight that as another area of interest for us. And I think, overall, that this tightening of focus really reflects our better understanding of individual countries. When one considers our appetite for risk, the opportunity set, and where we think the actionable investment pipelines are. And I think, in a nutshell, it's the latter that we've really refined since being on the ground. I think there's no substitute for being on the ground in terms of developing a pipeline. So whether that's developing the relationships that we seek out and value, a better understanding of what it's like and what's required to do business in the region, and then of course identifying specific target investments themselves. So I think that's where the refining has really taken place. I think worth noting, I mean, typically, a lot of our investing is done on a bilateral basis. We're pretty loath to turn up to wide auctions and privatizations. So again, we've enjoyed a great deal of success globally over a consistent period of time from that emphasis on bilateral investing. And in order to do that, one really does need to be immersed in the region, to maximize the chances of being able to successfully do that. So I think at the end of the day, it being on the ground has really helped that, and in a relatively short period of time, I think we've We've learned a great deal, and that's really been factored into the strategy. I mean, overall, our strategy really is, or one of the core fundamentals is around investing in and facilitating growth. And I think, again, we've all talked about it, but the region certainly offers that, and more than pretty much anywhere else in the world. As part of embracing, growth, we embrace development style opportunities. That served us extremely well globally and historically, in terms of being able to continually deploy a significant amount of capital, but also generate really kind of market leading returns for our clients. So, we see Asia as, a really exciting region, and that's driving a lot of our focus, in terms of where we're spending our time. So I think, overall, look, really pleased in terms of that we've been able to validate the business case and the opportunity, and go further than that and actually identify, tangible investment pipeline, not just for now, but for the longer term, which, is obviously important given that, we're a perpetual business with a long-term horizon.
Great, thank you for that. So I'm just slightly conscious of time. So coming to you, Bharath. So you're kind of in charge of digital infra at Partners, and leading the charge on that front. So perhaps you can share your thinking on that sector.
Yeah, sure, happy to. And I'll overall approach the answer, just to add some variety, theme first, country second, to give you a sense for the themes and which countries drop out of that. As far as digital infrastructure is concerned, as I said, highly theme focused, and this is one of our highest conviction themes globally. And within that, especially for data centers, Asia is our highest conviction region. So I see from the investment committee down, there's a good level of support within the firm to go sort of capture that opportunity set. And that has flexibility between buying operating platforms, which tends to be less of the case there in Asia, hence the white space, and building and taking on development risk to an extent, backing proven teams in markets that we believe in. So we've been busy with that, and that continues to be a very highly interesting part of digital infra with a platform approach. Outside of that, I think fiber, both fiber to the premise, fiber, backhaul fiber, and so forth, continues to be of interest. We have done quite a bit in Europe and the US in this space, and then one where there are selective markets in Asia where it makes sense, and then we continue to zone in on that and have a few irons in the fire. Lastly, towers, that continues to, again, we continue to be selective. Australia has a certain set of market growth potential compared to a Philippines or an Indonesia. So we are open to both from a buying and a building perspective. So overall, digital infra continues to be a high conviction theme. Outside of that, obviously renewables, which sort of expands into waste to energy, remote power, and so forth, continues to be a mainstay focus in the region, where we explore both building core and platform expansion strategies. Australia in the overall region continues to be perhaps our number one market, where we are one of the largest investors into greenfield wind, and that continues to be highly interesting. And that also extends into grid firming and intermittency sort of infrastructure, which again, in Australia, there's quite a lot of opportunity there. Outside of Australia in renewables, I guess the other markets of interest would be India, Vietnam is emerging, I would say, and we have a platform in Taiwan. We are one of the earliest investors into solar in Taiwan. We had a platform in solar in Japan, which we have exited, and now in offshore wind starting to look pretty interesting. So those are some of the markets within the renewables theme that continue to interest us. Outside of these two broad buckets, I would say I would just highlight on infrastructure services, the private equity style sort of operating companies with an infra bent to it. We continue to focus on that. We have done a couple of large investments in US and Europe, USIC and TechM, and we continue to chase down that opportunity set here. Although I will say that'll be on an opportunistic basis, team-driven, with a bias towards developed Asia and India. So that's what I would say we are focused on.
Well, thank you very much
thanks.
to all of you. Thank you, Kwong Wing, and thank you, Prat. Thank you, Bharath. Thank you, Damian. Time's up. We have to move to the question. Thank you for your insights. We have a couple of questions, and I'll invite you, everyone, to do not hesitate to go to the interactive discussion box on the right-hand side of your screen. And the first question for you, can panelists comment their direct experience in dealing with local regulators, public sector clients? Any relevant case studies to share with us, maybe? Dear panelists, did you actually hear my questions?
Yeah,
Would like to answer.
Hi, it's Damian. Hi. I mean, I can't speak for the others, but I mean, I think it's a function of infrastructure. I mean, infrastructure has been interesting in terms of the evolution of the market. I mean, certainly, as I mentioned right at the outset, we've been providing capital since 1988, and certainly in those old days, it really was about investing in heavily regulated utilities. And we've largely kind of moved on from there and, as I say, embraced the kind of core plus and value add end of the spectrum. Nonetheless, I think it's very difficult to move away entirely from regulation. So having a detailed understanding about regulation, both at a local, regional and national level, having experience of investing in assets around the world and seeing how regulatory models have evolved, the focus from regulators, etc., I think is critical, particularly as you look at a new region like Asia, where, frankly, many of these countries are looking to develop and grow their regulatory models and are looking elsewhere for examples. And, often I think as investors and experienced investors, you can help them go on that journey in terms of putting in place good regulatory models. I mean, India, we talked about, is a good example of that. I think particularly, for example, in the airport space, I think over the last, 3, 4, 5 years, actually that side of things has been a marked improvement in the country there. So, yeah, look, I'm sure most of us, all of us have had experience in regulation. I think it's always going to be a key factor for the sector.
Anything you'd like to add for the others?
I would echo what Damian said, in terms of the core plus focus, and it tends to be a step removed from, looking at core infra from a government interface perspective. Having said that, our approach is not unlike what Damian said. I would also add that, it comes down to focus, and it comes down to knowing which markets are in your tier 1 list and which markets are in your tier 2 list, and being opportunistic on tier 2, being sort of really deep focused network wise in your tier 1, and surrounding yourselves with the right kind of senior advisors that can lend that expertise to navigate the regulation in any given market, and hence and since then go on the board and actually deliver the value creation that hinges on sort of navigating the regulatory environment. So that's how we approach it: focus and advisory bench.
Well, thank you very much. We actually have a second question: how much we should discriminate by categories of countries, Australia, Singapore on one side, India, China, and then Southeast Asia. What do you think?
So as I said, I can start. I mean, look, we think of it slightly differently. We think of it theme first, then country second. And as part of that, for example, where I would say, waste to energy or remote power or even renewables tend to be hard from a cost of capital perspective in India for our cost of capital. Digital infra is the other story. Meaning it's a really attractive market from a digital infra perspective. Not short of challenges, but I do think approaching it from a theme first, then country second sort of makes the same country work for a certain set of themes and not. So that's the lens we use to make sense out of countries. So it doesn't really sort of tier on a univariate basis into tier 1 countries, tier 2 countries, tier 3 countries. It really depends on the opportunity set.
Anything that you'd like to add, actually, Prateek or Damian, on this question?
I think the way I would look at it is it comes down to effectively the sectors you're looking at, because there will be some countries, whether it's Australia or Japan or Korea, but you're going to be more comfortable when certain sectors, and links into your prior question on regulation, that the general tendency would be that if you're going into the growth markets where the overall regulatory systems may be still evolving, you would want to be in sectors where the interface with the regulator and governments are a little bit less compared to, say, being in Australia, for that matter, where the regulatory systems have evolved over the last 2 decades. That generally follows what you're used to seeing in Europe. So I wouldn't call it as discrimination, but it's just basically which sectors you're more comfortable, depending on the situation on ground and how much regulatory interface you want. But the flip side of it is you're going to be in countries like India for the growth. So you need to take into account what risk-adjusted returns you want.
Well, thank you very much to all of you. If you, of course, have any other questions, please do not hesitate to contact our moderator, Kwong Wing Lo. Thank you very much to all the panelists. We'll now conclude this session with just a couple of information. What's going to happen next at 45, we're going to have our next live panel discussion from Paris on the theme Infra Equity, being an infra investor in COVID times. See you in about 12 minutes. Thank you very much. Thank you.